We
Yeah.
totally do.
Yeah.
Well, ladies and gentlemen, we are live. Happy November, Mark Brower, Taylor Ho. This is like our third live, maybe fourth live. We've done
Something
other
like
phone
that.
calls. So Taylor just accused me of looking more professional because I've got a salt and pepper beard going here. What?
It's tough for an Asian like me because I don't this is all natural, right? I think
Yes,
there's like one gray somewhere.
you have to search for it.
Yeah, I think I have a nose hair that's gray actually.
Too much information. Taylor, what's going on, man?
Doing all right. How are you?
Good. Hey, so we're going to talk about factoring leases. I'd love to hear
Yeah.
everything you. So, can we start this by saying 2 years ago, I was at a NARPM vendor hall, and
Mhm.
I can't remember the company. You could probably tell me the company. Maybe the company should remain nameless. And I came across a vendor who's like, "Hey, I can advance your clients 10 months of rent." And I thought, this is interesting.
Yeah.
However, they had that bundled in with other stuff that
Well,
I wasn't
steady
fully.
steady rent does this, right? So steady rent does this, and look, I'm happy to give press to whoever who's trying to, innovate for the industry, right? So you texted me after NARPM National or during NARPM National. There's a new, company out there called Rise Market, RYSE,
Yep, that's it.
market.com,
Yeah, yeah,
right?
yeah.
And like I had a knee-jerk reaction, and so did you, but I absolutely uh like I was quite shocked that you would want this so badly because yeah. Look, you can read the text, you can share the text too, right? But like, yeah, I mean, look, I in general, and I should note, like, I've actually been trying to factor leases for our industry for quite literally like 8 years now.
Okay, let's
Okay.
break this down. What is
Yeah.
factoring leases? Let's bring
Okay.
everybody up to speed
Sure. So
100%.
yeah, and look, I'll even say this, right? Like there are absolutely different denotations, right, or quote unquote definitions of what is factoring. Okay, it means different things for different industries, but in general, there's a $3 trillion a year market around the world where essentially traditional finance or traditional lending from banks uh, does not fit with. Okay, and
$3
so.
trillion. So you mean when I went to Mattress Firm and put my
Mhm,
$5,000 purchase on 72 months, same as cash,
mhm.
and I went with Symphony Bank.
Well, Symphony Bank is still like they're doing personal credit. Okay.
Okay.
Like I would say they're the next iteration from factoring. This is more like, what's called merchant cash advances or equipment, you know, like equipment factoring, right? Like this is like
What is
typically
factoring?
in factoring is simply taking a contract and usually a revenue contract, and
Okay.
someone essentially is willing to pay you up front for that, right? So like the
Are
net
they buying
present
your
value,
contract? They're buying or they're
they're effectively buying your contract. Now, some would say you are literally buying the contract, and others could say you're buying a derivative of that contract. Okay. Essentially, you're buying a contract for future revenue,
but
future
the
income.
person you're buying the contract from is not assigning the contract to you.
In some industries they are assigning the
Oh,
contract. Yeah,
so
that's what I'm
so
saying. It depends on the industry, but fundamentally, right? If I have and look, this is the mortgage industry, right? Like now, granted, in the mortgage industry, they're literally selling your contract. They're assigning it to another bank or another purchaser or something like that. But it's a very similar thing where, in the mortgage industry, someone originates it, right? Whether it's a mortgage broker, whether it's a bank, whoever it is, and they get packaged together, and someone else is going to buy that contract for the future cash flows. Okay.
and this is independent of placing any new liens on that person's credit. It's
Correct.
independent of doing any new screening on that person. Like
That's
like
correct.
like I don't know if we want to dive into it next. We're staying high level and you're defining things right now, but
Mhm.
like how do you underwrite these? So that like put a pin in that and let's get
Sure.
back to
And,
that.
and 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 we can, yeah, we'll absolutely get back to how do you underwrite, right? But fundamentally, when a contract is being factored, right, like it is most of the time it is being discounted, right? And someone is paying you up front for the rights to that contract,
Yeah, that makes sense. Yeah.
right?
Can we put a
Like,
pin in something else? Because I'm
sure.
worried about losing it. What? Okay, here's a pin. Maybe 20 minutes from now, why don't property managers try to do this themselves? Okay, go back to high level again.
Sure. Well, okay, we'll come back to that. Yes. High level, what property managers do, and I'm bringing this to our industry, is we are originating a lease contract. Right?
Right,
Everyone knows what a lease contract is. Well, that is
yep,
a contract for future revenue, right?
right,
On what? On a rental property that you manage, right?
right.
And so, of course, and we'll get into underwriting and all this kind of stuff, but
You
fundamentally,
don't have a cowboy hat on today.
I don't. I have this hat. You can tell me which hat you want me to wear. It's crazy. I
Yes,
this
let's go with
hat.
the red hat. And I don't see a liquor like shelf behind you. This is a new
I
environment.
yeah. I'm at like I'm at my co-working space today. So Mondays and Fridays I work
That looks like a
close
good
to
co-working space hat, especially if it's raining outside. All right,
yes.
get back into it. So
Okay.
factoring. So I bought. So there's a lease in place. There's a cash flow. There's an
Mhm,
expected cash flow. The part
mhm.
the part that like really boggles my mind is what if I did a terrible job screening this resident? Like, how do you
Absolutely.
know you should be factoring my lease? I mean, this has a significant impact on your loss ratios. Like, because
Absolutely. And this is where I would caution anyone getting into this as a property manager, as anyone who's wanting to buy leases, right, that are being factored, being sold. Like sometimes, and this is the mortgage market, right? In the mortgage market, you get what's called like a data tape. It's literally a spreadsheet
what
of
the heck is a
mortgages.
data tape?
Okay, it's a spreadsheet. Data tapes are spreadsheets. It's just a list of all the contracts. Now, if you think of mortgage, which is similar to our industry, you have like an address, right? You have addresses, right? So that anyone buying this can be like, oh yeah, I can Google Maps the address.
Can we
Okay,
pause
but
really
then
quick? I,
sure.
I have a personal share. In 2010, I partnered with a guy, really wealthy dude out of Southern California. He had connections with loan servicers. We were buying tapes.
Hmm.
We bought tapes, which meant we bought tranches of properties that were in default. And I
Yes.
never knew why they called them tapes. Like it almost
Yeah.
sounds like kind of like the ticker tape coming out of like the old school, like stockbroker, things. But anyway,
Mhm.
I
Yeah.
di-
But fundamentally, you're buying a spreadsheet of quote unquote contracts, right? Now, in our industry, to bring this to our industry, there's some sort of identifying characteristics of these contracts, right? Otherwise, if you were just buying lines on a spreadsheet, you would see like the terms, right? Like how much is the principal, let's say, what are the terms, like what's the coupon, right? Like what's the like, how long is this, right? And then there's some sort of like you would attribute like a net present value to that. Okay, like
right.
how much am I willing to pay for that
Of
line,
course.
let's say,
Yeah.
right? But in our industry and in the mortgage industry, you have like addresses, right? You have maybe they've anonymized the person's name, but you've got like credit scores, right? Like you've got things that give some sort of additional like qualifying or underwriting characteristics to each line on that tape or that spreadsheet. And so, like if there's everything else is the same, right? But you've got a 600 credit score person, right? Whether it's paying a mortgage or in our case paying rent versus a 800 credit score paying rent, right? Any reasonable person, I think, I'm going out on a limb here, right? I think you would pay more for the person with the renter or the contract with an 800 credit score versus a 600 credit score, correct?
Of course.
I don't know, right? Like I hope so, right?
Yeah. I mean, because your loss ratio would be lower.
Well, okay, so let's not introduce a new term that maybe not a lot of people understand what loss ratio means, right? But fundamentally, the risk, right, of that contract or that lease paying out is arguably dependent on the credit quality or credit worthiness of the renter in our
Correct.
industry,
Correct. And when
right?
you're factoring a lease,
Mhm.
it like it boggles my mind. Like unless the person factoring the lease and giving this money out is going back and re-underwriting leases or doing some due diligence on the originator of these leases, they
Mhm.
might be taking undue risk. Agree or disagree?
Oh, fair. And that's going into, like fundamentally, if you think about the mortgage industry where we just talked about like there's tapes, there's lines, right? There's addresses, there's maybe credit scores, right? That's pretty much like all you really get. Okay. But in our industry, right? Like, and that's also because it's a much more regulated industry as well. Okay, like
What
mortgages.
are you talking about? Factoring is a regulated industry? What
No,
are
no,
you
no,
saying?
mortgages in general.
Got it.
So when we try to bring this in, like factoring into our industry, where there is zero regulation around leases, templates, things like this, right? Like that's where, I would say we need to be careful as an industry. I'm not saying this is a bad thing. I actually think, look, I've been trying to do this for the past 8 years, right? Like, but fundamentally, like your lease, a Brower Properties lease is not the same as, and I'll throw Tiffany in here because we love Tiffany, right? It's not the same as a Rosenbaum lease,
Which one's
right?
better? I'm not going to comment, but which one's better?
I
Oh,
have no
no.
clue.
You got to stake a claim.
No,
Which one would you put your money on? My lease or Tiffany's lease? Come on, man. You got to play with me.
Tiffany.
What? You're just messing
She,
with me. All right,
no,
let's keep going.
she's got scale, right? The only thing I know about your
Oh,
operations,
that's true. No.
the only difference is
You're
she's got
biased.
way
You do
more
her
units.
daily recs.
No,
Okay.
no, 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 no,
This is
no,
a
no,
terrible question.
no, no. Outside of daily Rex, right? Literally, just who would you trust? An operator with thousands of units or an operator with sub 500 units?
I don't have sub 500. Yeah, you haven't seen my stuff. Anyway, let's get back to the
Well, that's what I'm saying,
conversation.
right? Like, or sub 1,000, right? Well, whatever it may be. You haven't even acquired a PM yet.
So back to factoring. How do you assess risk when you're factoring? Because so like simplistically thinking, it's like, oh, well, we've got a property manager A has hundreds of lease contracts.
Mhm.
And maybe we trust, I'm the guy with the money, right? Maybe I trust the fact that they don't want their life to be a living hell. So they've been somewhat selective in the residents they'll put in their contracts.
And
In their properties.
I would immediately say that may be the case if the PM does not have incentives to originate these factoring, if they don't have incentives to sell these things. Once you incentivize a PM to sell a contract or a lease, I would say all that goes out the window
Okay,
because
hold
there's
on.
no
You're
risk.
touching on something that's really important to me.
Mhm.
Incentives.
Incentives, absolutely. I'm everything. What's that phrase? Like I think it's Munger or Buffett like coined this, right? But it's like you show me an incentive and I'll show you like
The
whatever, right?
behavior.
Like the
I'll show you
behavior,
the behavior. You
exactly.
show me the
Yeah.
incentive, I'll show you the behavior. So, okay, so you're making an interesting point. You're saying that once you introduce factoring into property management lease contracts, now you've shifted incentives and now the property manager is more likely to take on risk.
No, no, no. Let me clarify. I'm not saying just by introducing factoring, you change the incentive. I'm simply saying if you introduce factoring where the PM gets compensated to sell these leases, then the incentives, the behavior is going to change. Just because someone now owns a contract or a lease contract, but nothing else changes with the management company, they still take 8 or 10% of rent and they still need to do their job, collect rent, like evict bad tenants and
You're going
things
to have to
like that.
convince me of this. I think this is BS. I don't think it
Sure.
changes the incentives at all. Property managers still have to live with that resident. Not only that, they have to face the owner if something goes south.
Oh, I
And
don't
and
disagree.
and I hold on, I want to put a pin in something else before I
Mhm.
forget. What guarantees can factoring leases provide to owners in terms of guaranteeing that cash flow? Let's come back to that because if a tenant gets evicted or if they skip out, like there is a version of factoring leases where you could guarantee, like, hey, there's no clawback here. But
Mhm.
jumping back in, why do you think this shifts the incentives?
Well, again, the PM is now being compensated to sell a lease. If
That they have to
it,
keep servicing.
well, I don't disagree, but there's no risk on the PM. They have to keep servicing the lease anyways. And if anything, many would argue, because we have plenty of these people in our industry, that servicing a bad lease makes me more money as a PM. Look, I'm just being real.
Okay, but I don't see how that shifts things. Sure, I get paid today. Okay,
Well, that's what I'm saying, right? Like
okay,
fundamentally, like you
okay.
still have
Let's
to
be.
service the lease.
Here's here's an honest acknowledgement.
Mhm.
If you tell me, hey, you factor this lease, you go convince your owner to take 90 cents on the dollar for the next 10 months. Property manager, you not only immediately get 10 months worth of property management fees,
Mhm.
but I'm going to pay you a bonus 2% on that money.
That's correct.
Okay. So
And by the way, I should state here, I should note, right? Like, I'm not saying that's a bad thing. I think that's a good thing. You provide liquidity, like there's a lot of things that you can do. But if done in if the underwriting is not good, right? Like that is going to blow up in very short order, right? And the example I gave you was, and let's use your example. You signed a 12-month lease, and whoever is like, you know what? I'm going to pay you 11 months now for that 12-month contract. Okay. Remember the industry, the subsector that we are in, which is accidental landlords.
right.
Okay. You now fronted that landlord because you effectively got the landlord 11 months out of their 12-month contract cash up front. My biggest worry, right, is that landlord actually going to keep paying the
Okay, this
mortgage?
is a separate topic. I want to get to this. Is
Yeah.
landlord cash flow management, right? This is an important part of.
As well as PM cash flow management, because the PM is the servicer in this situation, right? And in very short order, if you factored enough of these leases and the PM's like, oh my God, like because most PMs are not accountants, no offense, right? Like most PMs are like paycheck to paycheck effectively, or management fee to management fee, right? Like imagine getting 11 months or 12 months worth of management fees up front on 30% of your leases because it's a great deal, right? Now you want to go spend to go grow to get more of these things. Now you've just entered this like you're going to end up with like in month 6, there's no more management coming in. There's
Okay,
no management
okay.
fees coming in.
Yeah, okay, this is a valid point, but we're jumping around too much. So
Sure.
we kind of glossed over. I don't feel like we fully covered how does factoring assess risk? Like the person lending the money, how do they underwrite it? And number two, let's tie off these two things, the incentives. You're
Sure.
making this claim that I'm not seeing that once a once a property manager gets paid extra for factoring a lease, somehow they're going to take more risk. They're going to be sloppier with their resident screening. Like convince me of this.
Yeah,
I'm not convinced.
because there's no financial culpability for them.
Financial culpability. Where did the financial culpability shift? What was it before, and what is it now?
Well, one, the PM got all management fees paid up front, and you get an additional 2% of rent.
Understood.
Okay.
Where's the where?
So
Which
if
you
the
need the
lease does
before
not
and after
perform,
for a
yeah. So if the lease does not perform, right? Let's just say it gets evicted, that the tenant gets evicted, that lease didn't perform. Your money just did not that's 100%, that's loss.
well,
Whoever just bought that contract just lost their shit. They lost
yeah.
their shirt on that deal.
Okay.
Right?
But how so you're suggesting I don't buy this at all. So we can agree to disagree.
Sure.
You're suggesting that a property manager starts getting really loosey goosey with their resident screening because all they got to do, put this tenant in place, sell the contract, I'm out. I got all my fees. I got an extra 2%. Minor got their money. Like, good luck. You're holding a bag of poo now, Mr. Factor.
And keep in mind, I'm not necessarily like, I would argue that's probably the extreme, but the not so extreme is the PM and the landlord in cahoots with each other. The PM, I'm not going to say Brower Properties here, but the PM's just like, hey, landlord, by the way, just letting you know,
okay,
I've got this guy who's willing to buy 11 months out of 12, which is essentially a 10% discount. You know what? Let's lower the requirements. Okay. Let's lower our standards. Let's bring in tenants who may not be as credit worthy, but who cares? We all get paid up front.
I would agree with I would agree with you if
let's raise the rent. Let's get your sister-in-law to sign a lease.
Oh my gosh. This is so much effort for such a low payout. And
what are you talking about? No, Mark, it's a massive payout.
No, it's not.
The manager, get your management fees up front. The landlord got 11 months out of 12.
You can never pull off such a scam at scale. I think this is your own limited mindset and the reason you haven't done this yet. And I think this is like poor logic. I think
no. Actually, I would actually say the counter. This is the reason why this has not happened yet. Because our industry is there's no standards in our industry. No one's an accountant, right? Like if I were underwriting a PM, you know what the first thing I do is when we underwrite PMs for fixed? The very first thing we do, what do you think we do?
We need to look at their books.
Yeah, are you reconciling? Like, it's like you want me to factor a lease, great, but are you even reconciled? Can I trust anything?
Okay, so you answered one of the questions. How does factoring assess risk, or how should it assess risk?
Well, at
And
least
you're
how we are
saying,
doing it, right?
okay,
Anyone
this
who's
is how you
going
would do it.
in,
That's fair.
yeah, anyone who's going in is like, oh, we don't even care about your books. We just want to look at your delinquency rates as a PM, right? And they like, I'd be like, we ain't giving you shit money. You're not getting anything from us.
Okay. So we're going to agree to disagree. I don't think it changes. I haven't seen, you haven't convinced me it changes PM behavior at all. First of all, it's not that easy to prop up some property management business and then pull off a scam at scale where I'm suddenly shoving like hundreds of unqualified people into properties just so I can factor the lease at the owners at and
It's not at
then
the owner's expense. Keep in mind, because the owner gets paid as well.
well,
That's the thing here.
they're giving up 10%, and then they've
But
got
but
no,
yeah, but
they've
you've
got to make it.
inflated the rent by 10% or 20%.
Okay,
That's
but
all. That's all it
but
takes.
then you lose your relationship with the factoring company, and you're back to square one.
Oh, I
And
don't disagree. No,
yeah, yeah.
that I don't disagree. I'm just saying. I'm. That's why I'm saying like if we
But
want to
that's why I
bring
don't see it
this.
happening. The long-term incentives are aligned with the factoring. You haven't convinced me that there's any kind of shortcuts that people are going to take, and there's like adverse risk. It's like such a nightmare. It is such a nightmare to build a substantial, sizable property management business. There's no way in hell anyone is going to risk that long term to take some shortcut factor payday and simultaneously burn that relationship. Not going to happen.
I'll give you a great example. You're 75. You're ready to retire. Your kids don't want to take over the business.
And you can't sell it to your employees.
How many people sell the business to their employees?
I
Come on,
know.
Mark.
Well, then you sell it on the open market. There's a good market for
You're
selling
yeah
property.
yeah, and you're in
So
bumfuck
you're going to
middle of
write off
nowhere.
to the sunset by factoring all your leases.
I mean, Mark, you understand that people write off into the sunset by stealing the security deposits.
well, that's
It's the same thing. Like they burn it all to the ground. Like literally, there are literally cases in Oregon and
well,
in
I
Arizona
appreciate.
where
Okay,
they literally just ride
you're
off
right.
to the
You're right.
sunset, go to the
You're right.
Philippines because they're like, you know what? No one wants this thing. It's a horrible business,
Okay.
but I've got $1 million sitting there that nobody
Okay.
cares about.
Okay, I concede. You have a small point here. Here's the point that I think you have. Somebody comes in, some nefarious actor comes in. They buy 1,000-unit property management company.
Sure.
They don't care about the history. They don't care about where it's come from. They don't care about where it's going. But they have to be of the mindset that I'm stealing all the trust money, all of it, after I factor as many leases as I can. I'm going to burn it to the ground. Like, really?
Well, no, but that is what I'm worried about.
You're worried about that, and
No,
that's,
and
and I
also keep in
appreciate
mind,
that.
keep in mind, like my mission this entire time has always been we're trying to clean up the industry and hopefully make it better. Okay.
Yeah.
What Fix is doing is we are factoring leases. But all I'm trying to say is I'm trying to do it responsibly and scalably, right?
You're
I'm
just
doing this.
requiring it be
I'm
spent on
just saying,
maintenance. I don't
no,
know.
no, no, no,
You're
no. No, no, and after you sent me Rise, I was like, you know what? I'm willing to do it like that as well, but I'm definitely not willing to do 11 months for 12 or a 10% discount. There's no way we would do anything like that.
What would you do?
Again, we within our underwriting, we're willing to take a third of rent towards payback, right? So a third of rent towards payback is something that like you can model out very easily. Like, oh well, how much could you essentially front, right? Yes, Fix is doing it for maintenance and repair right now, but arguably it could be for anything. But again, we have specific like limits or guardrails to make sure the property continues cash flowing.
Why?
Because at the end of the day, if the property owner does not pay the mortgage because they didn't get a distribution or whatever it is, everything blows up.
Yeah, but that takes 5 months to play out. So why are you even at risk in that scenario?
Because I hold the money that I raise from is wants 12 months.
No. But you're yeah, okay. So here's
Like
the scenario.
that's the key thing that people don't understand it with fintechs, right? Or factor anything that has to do with money is it is my job to absolutely make sure, and shit, it's not even my job. Literally, like I have PGs on this stuff.
I understand.
Where if I say, hey, I'm going to take $50 million of your money and we're going to do it with this specific kind of product, right? We're going to factor leases and we're doing it.
Start
right? No, no,
small.
no, fair. Yeah, I know. I'm just saying, right? But if I don't give them the 14% or the 16% that they're asking for, including
True.
loss rates, including my working capital and my
Yeah.
costs, right? There's nothing left. You
Yeah.
don't get a chance to raise again.
Okay. Guess what? I think the returns on this factoring thing are like incredible. Like I really think that you are onto something with fixed, with knowing that factoring leases was a lot more stable than the financial markets have any idea about. It really is a lot more stable, I think.
Oh,
And,
absolutely.
and, and
But
so,
I
and,
treat the property managers we work with as partners in this.
great.
And in every single call I have with them, I tell them from the very beginning, for the first call, this is a credit building exercise between you as the property manager and ultimately us and the markets, right? If you essentially originate a non-performing, financing agreement, a contract, right? It is very likely that we has ultimately cut you off, right? Because
Yeah.
so it's one of those things
Yeah.
where it's like, yeah, absolutely, right? But like
But
again, it's like,
let's
yeah,
talk about the returns though. Let's talk about the
sure,
returns.
sure, sure, absolutely.
So, and then I want to get back to the cash flow management because I think you're onto something there. And I think the way you're approaching this, at least what you described as like a third, no more than a third of the lease,
Rents,
pays
monthly rents. Yeah.
yeah,
Yeah, goes to pay back,
the
whatever the
the
financial
the
obligations
advance.
are.
Do you call it an advance? What do you call it?
Yeah, you can call it advance, you can call it a
Okay.
factor, right?
Okay.
However you want to call it, right?
Okay. So I
Yeah.
think you're being very conservative. I think it's important. I want to talk about two things. I want to talk about the returns, like the
Mhm.
ridiculous returns in the
They're
scenarios.
not that ridiculous, but you can call it. And look, I will happily be very transparent about this because people think it's ridiculous. It's not.
Here's where the ridiculous here's where the returns can get ridiculous, and you and I both know this. Once you prove up the model,
Mhm.
and then you get as the bottom layer of your capital stack some like really like like your lower 40% or 50% is at like 5% or something like that.
Well,
Now
it
you
won't be
can
5%. It's always going to be like risk-free rate plus probably double minimum. It's probably double the risk-free rate at a minimum,
so
always.
that's what is that, 6.5? What is that?
No, right
Seven?
now risk-free rate's like 4.25 still, so it's going to
Okay.
be like 8.5
So
minimum, and
you
that's
think the
like,
lowest, most conservative, safest money that could finance anything right now is around 8%. Like that's like super protected, super layered down, like your bottom stack. You're saying that's
yeah.
8%.
Yeah, like, and that's even deploying $1 billion a year, and you're still only going to be able to get like even at $1 billion a year, you're still probably at double digits today.
Okay.
You're like
So
low teens still.
let's say your overall, let's say your gross, I don't know if I'm saying this the right way, your gross ROI, your gross returns are like 22%. Because the
Mhm.
factoring model I'm thinking of, it's like 20 to 25%. And
Sure.
you lever it with 8% money up to like what, 30, 40, 50% of your capital stack. Like
Ooh.
now you're talking about returns in the 30 to 40%
And,
range.
and people who are levering these things, like that, that's just you're literally playing with fire. Like
Well,
we're
it's
doing this
you're
unlevered
playing.
first off. Yeah,
I'm just saying in the future they will be levered because this
yeah.
model will be proven up and people will get
Sure.
comfortable and all that stuff.
Absolutely. Absolutely. And let me help you understand 22% how, and by the way, nobody is getting 8.25, 8.5 right now. Okay. My bank that's giving me 50 right now, our cost is like 14, but then that doesn't include loss rates. It doesn't include our working capital, like how much it costs us to originate these things, because any of that stuff, let
Yeah, yeah,
alone a 2% take to a commission to the manager, right? So let's just be like very realistic in
yeah.
this. If
Cost of
my
capital.
cost is
We're not in
14,
SERP anymore. I know. I
yeah,
get it.
let's just say mine is, because mine is legit, for I can show you the agreement right now. It's 14, right? If mine is 14, you have to account for loss rates. We don't know what the loss rates are right now. Okay,
Right. I
nobody
understand.
knows because
Yep.
nobody's deploying at scale. Okay,
Yep.
but let's just say, because historically, like super conservative is 3% loss. Okay,
Right.
by the way, ours is sub 2%. Okay.
Okay.
Like we are very, very conservative right now. But
So
realistically, when you model these
14
things
plus
out,
2 is 16, and that's just the cost of your money. Yep.
that's just the cost. And also keep in mind, like those loss rates, that 2%, that's because we're doing very conservative right now. I
Yeah.
would imagine someone else that's doing this who's not even care, doesn't even care if they're reconciled, right? Your loss rates are greater than 5. Easy, all day
Got it.
long.
Okay, but let's talk about that. So now you've explained like cost of money and like where you need to be like minimum, and it's not cheap. I get
Mhm.
it. But let's
Yep.
talk about on the other side. Like, what are the
Well,
returns? What are just so that people understand, if they're curious and they're nerdy
sure.
like I am about money, like what are
Yeah.
the returns? Because there's a product out there.
I will be absolutely ecstatic if after deploying 50 million, I break even.
I want to break it down. I don't want to
No,
like
yeah.
broad brush
No, no,
it.
no, no, no,
Uh,
no. Literally break it
Give
down.
me let's do one factor scenario. So if any
Sure.
so the ones of people that watch the video at this point
Mhm.
can like have like an example, a case study.
Sure.
Let's say I've got rent at
15,000. Well, okay, fine. You want to do 2,000, no problem,
two
right? Call it
thousand dollars
2,000.
a month is the rent. I
Yep.
just signed the lease. Someone's
24
willing to
months.
factor
Sorry, 12 months. 24,000 over the year.
somebody's willing to factor only 10 months of the lease.
Mhm.
Let's try to get it as close to reality as
Yep.
possible.
They
And
pay
they're telling
20,000 and
and
they
they're
want
telling
24,000 in return.
Yep, and they're telling yes, exactly. 10 months, they're going to factor 10 months. They're going to give 20 that's $20,000. They're going to take 2,000. They're going to take 10% as their fee, right? So the factoring is only going to give us 18 grand on 20 grand. That's my point, right?
Sure. I'd use the other example because you said $2,000 a month in rent, right? So over 12 months, that's
I'm
24,000.
doing 10 months. They'll only factor 10 months.
No, yeah, yeah, yeah. So they're going to give you 20,000.
They're
Yes.
going to give me 18,000 because they
Why
only
would they
give
give you
9
18?
because 10 months times 2,000. I'm
Oh,
only
you're saying
factoring.
they're only giving you 10. Okay, fine, fine,
That's
fine.
right.
Okay,
Yeah,
fine,
yeah.
fine, fine,
So now
fine.
they're giving me 18 grand. The owner paid a 10% fee.
Mhm.
And so now, and you would think, well, gee, the factor company is, they only discounted 10%. So the return's 10%. Not so. Time
No,
value of money, they
that's
start
correct.
immediately getting paid back monthly.
That's
Right.
correct.
And
Yep.
so their return isn't 10, it isn't 10%. It's over 20% in this case.
Look, we can literally just go to ChatGPT right now and ask them what the IRR is on that.
Yeah.
Okay.
So it's over
So I
20%
have
in that
a
case.
2K per
And,
month
and, and by the
lease.
way, that's the worst case scenario for them if you borrow all 10 months. Because if someone's taking a flat 10% fee on any length of time that you advance, their ROI goes up the less you take. In other words, if I only took 3 months and I agreed to pay a 10% fee, suddenly that's not a 20% ROI for them. And I'm using really, somebody's going to argue with me. No, technically you didn't do the math right. I'm just broad brushing this. Instead of 20%, you're talking about 40% if they only advance 3 months. 40%.
No, fair. And I'm not necessarily saying that's the right model. Like that's the model. Like they're essentially trading, right? Like they're just like, hey, we're gonna take a 10% discount on a 3 month factor. That's great for them. Okay.
Well, it's
I
not just great, it's phenomenal.
Oh,
It's
absolutely.
phenomenal.
You know what else is phenomenal and usurious? Late fees.
Yeah. Well,
Who charges a
I
10%
know.
late fee
Yeah.
on one day being late?
Yeah, and not only that, but also security deposit alternative fees when it was crammed down tenants' throats and done the wrong way
Sure,
is also
absolutely.
usurious. Yeah, I have multiple competitors who will remain unnamed in my market that essentially charge residents the entire 1 month's security deposit
Yeah,
fee
over a year effectively.
over the first year. 100% non-refundable goes to the property manager, ends up in
Sure.
their pocket, and they think because the market's justifying this behavior, it's not usurious. Regulators aren't coming for them, and this is something to build their business on. I think it's kind of despicable.
Well, I think there's a lot of despicable activity or behavior in our industry because every time we bring up late fees, everyone just says, "Yep," and they don't change.
Well, that's why I debated with Peter Lohman, a broker owner, earlier this year. Leasing fees, late fees, everything's on the table. It's not because I'm some saint and I've got it perfectly figured out and I'm doing it beyond reproach. I'm saying these are the things we should talk about before our hand
Yeah.
gets forced.
Oh,
Anyway,
absolutely.
that's a
And
totally
and by the way, I do want to say this is why I appreciate you, Mark, spending the time to talk to people like me, right? Even though I'm a vendor, but I am also I own property management companies, right?
yep.
And look, similarly, like I talk about this I know for sure we have not changed our late fee policy. Okay. Now, granted, most of the markets we operate in have very strict guidelines on what late fees can be assessed or whatever. So we
Mhm.
just follow those to a T. Okay. So, but again, regardless, right? Like these are the things that we as an industry need to look at, right?
Okay.
Because if we don't look at it, someone else is.
The reason the word usurious came up is because I pointed out that in factoring leases, the factoring company is making 20 to 40% on their money, which is phenomenal returns. And look, I'm not begrudging that. I think it's great. I think it's wonderful. And not only and I think it's one step removed from this other conversation about late fees and forced or just highly compelled security deposit alternative fee programs that are like payday loan centers. The reason it's different is because we've got a different class of person, and it does matter who you're lending money to and who you're ripping off, because the level of their sophistication matters. The landlords that have so much money, they have more houses than they can live in. In the court's eyes, in the regulator's eyes, lawmakers' eyes, are more sophisticated, and so you offer them something where you as a factor company are making 40% on your money, but they're willingly agreeing to this. Sometimes there's scenarios where those things make sense. In our very earliest conversation about fixed, you pointed out to me how wealthy, highly intelligent people sometimes have needs for cash that are very compelling, that are very immediate, and the opportunity cost is so high that these products fill that gap because they've already whatever. Maybe they're just at that point where they've tapped all their cash. And somebody
Or
give me an
or
example.
their cash is deployed, right? It's
All
look,
deployed,
even
and they're gonna
myself.
miss some big opportunity. Like, I get it, dude. Like, if you could factor, if you get 600 grand by factoring all your leases and like and take advantage of a perishable opportunity and then recapitalize like shortly thereafter or do something, then why not do that?
Yeah.
Do you think factoring allows you to pay them back more quickly at a reduced rate, or no? Because they've already
No,
taken their 10% fee. Doesn't matter.
no, that's
You just
correct.
boost
So
their returns if you pay them back faster.
that is correct. And so the dirty secret in home improvement lending, right? In factoring in general, these are not loans, right? They don't amortize like a loan where you can pay it back early and essentially have a lower cost, let's say. Right? When these things get factored, when someone buys that thing at a certain price or whatever, you pay that total amount back regardless of how soon you pay it back.
Yeah.
Right?
So don't pay it back any sooner than you have to. That's the
Don't pay
point
it
of the
back
story.
anytime. Yeah, any sooner than you have to. Exactly. Because
All
yes,
right.
all you're doing is you're juicing their return.
Okay.
Yeah, like
So
they love it when people pay back early.
of course,
Yeah,
they should even offer incentives. It's like take it out
and
of
some
like,
do, and some
yeah,
do.
yeah.
By the way, some do actually offer incentives. It's like, oh, you want to pay it back early? Great. Like, well, yeah,
It's the idea of like $100 million money models. It's like if somebody like never stop putting offers in front of people, like there's always something that you can do to make their life better and your life better. And that would be true with this factoring idea. Okay, I'm going to get back into, before we wrap it up, fascinating conversation. We could talk a lot more about this, and this is new. This is like the frontier of
correct.
financial products in property management. So it's going to be exciting to see how this unfolds. There's going to be more people coming into the space. I believe people are going to enter this space. They're going to say, hey, if you only take 3 months, it's only 5% instead of 10%
Sure,
across the
exactly.
board. Also,
Yep.
I think people are going to enter this space and they're going to say things like, hey, if you factor through us, you're actually, no matter what, whether the tenant stops paying or not, you don't have to pay us back. Things like that. And there's going to be like different guarantees and programs woven into this and different rates. And so this will mature as it gets proven up. But I want to get back to, you said that you only will you're like you're capping it at a third. You're not going to factor and give people any more money than would require a third of the rental cash flow stream to pay back your factoring. To me, that's a very conservative thing to do, but I
Mhm.
think it's also tied into I think you understand the base of customers that you are factoring to, which are accidental landlords who do not have a high level of sophistication, do not have a high level of money management. Tenants are residents are worse, but landlords aren't great with money management. Let's be honest. And so your concern is, and the concern you verbalize that I don't necessarily resonate with. I don't think it's really material. Is that somebody has stopped paying their mortgage? I think that's garbage. I don't think that's going to happen. I think the risk is very low. But I think what's more likely to happen is you got maintenance that hits you.
Oh, sure. My point is any other kind of cash requirement from the landlord is now going to be severely, even more so, impacted because they got.
And how does that make a property manager's life better? It doesn't actually.
It doesn't. Yeah,
it doesn't. It creates more strain and stress in the relationship. There's more pressure when landlords don't have cash. It brings pressure to the property manager and resident relationship because there's an increasingly higher level of resistance to doing maintenance, investing in the property, doing the right kind of maintenance, And
that was my entire point of saying, I think property managers who push factoring onto their landlords to get the quick commission, right? They're trading a super short-term 2% pop for long-term just angst, right? Like eventual angst because the property is going to need money. The landlord's going to need to pay that mortgage, right? Like something's going to happen. And now you've started tapping into essentially the property's financial performance. You're starting to lever the property, quite frankly, right? You're levering the cash flow, right? If you don't do that, you don't do that conservatively, that's how this can absolutely blow up the industry.
So let me frame it this way then. If you were to give advice, let's say fixed is a little more conservative, like a third, like the whole ratio there that you've kind of thought through this problem. But let's say somebody's like, hey, I'm just rolling this out. Every landlord, I'm making an extra 2% as a property manager. I'm going to try to sell this to any of my landlords. Hell, dude, if I can accelerate 10 months of property management fees alone, the time value of money, that's gold, right? And then another 2% on top of that, I'm just going to indiscriminately sell this to everybody. Would you say, whoa, pump the brakes on that? This might not be great for all your clients. And these are the clients you should be leery of. And who are those? What are those clients? What are the use cases that you would say, pump the brakes, dude?
I mean, unfortunately, it's 99% of our client base, accidental landlords. I think it is irresponsible as portfolio managers, as asset managers of these investments to give, to literally front your clients money.
Is this like a payday? Is this like a payday? This is turning your lease into a payday loan center.
Yeah, it essentially is. Right. And the key difference between what we're trying to do at Fixed and what, let's just say these competitors are doing who are introducing this is we're saying, look, sometimes payday loans, quote unquote, or fast financing is needed, right? It is warranted. You understand it's a higher cost, but it is needed because it is fast, it's flexible, it's immediately available.
But if you're
doing this just because you want to go buy a boat or something, or
no. Here's why. Because it funds their gambling addiction. How about that?
Yes, fair, right? Look, I'm pretty famous for saying this. I don't know if I should say it here, but I'm just gonna say it because I usually wear a cowboy hat. But literally, most of the landlords that we know, I mean, they take any excess cash, they go spend it on hookers and blow, right? And it's if they do that,
how many people do you manage for? Those are not my clients.
Fine, right? But point is it's more of just a
I know.
You're
proving a point. You're proving a point. It's accelerated consumption, not responsible borrowing.
That's correct. Because I guarantee you, if someone gets fronted even 3 months of their rents, how many of them are actually going to be wait, I have to reserve, enough to pay the mortgage over those next 3 months because I'm not going to get another distribution. How many landlords are going to even think about that? They're going to literally see, I got $5,000 in the bank. I had to go, fix my car.
You're suggesting that the primary liability here, this is what I'm hearing. Correct me if I'm wrong. You're suggesting the primary liability here on advancing rent to landlords is those who are the least responsible are the most likely to
To
consume this
take it.
product
Absolutely.
and cause significant stress for themselves, their resident, and you a few months down the line because they're just not that responsible with money.
Yes. Nothing's changed with the tenant, right? No money, nothing has changed with a tenant lease, nothing's changed with a tenant. Arguably, nothing is. I'm agreeing with your point here. Arguably, nothing has changed with you, the PM, outside of you got a little spiff, right? And yes,
It's
maybe
a big
you.
spiff. It's a big spiff. Let's be honest.
It's 2%.
No, 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 no. 2% and 10 months of management fees advance to the present at a 20% discount
That
rate. Like that's significant.
that's if those competitors are letting you do that. By the way, I hope they are, but let's just say they are, right? Again, most of the PMs I know, right, are paycheck to paycheck themselves. Okay, like I don't know if you saw it, but like California, literally the DRE in California puts this out every quarter, right? They literally say every PM they go and audit from a trust compliance standpoint, on average, are short more than $30,000 in their trust accounts. Why? I can tell you why, because I'm the bookkeeper accountant for the industry. It's because they don't realize, oh my gosh, payroll's coming up. I don't have money. I don't have enough money in my operating account. Let me just borrow from the security deposit account. Like
Kyle,
that's literally the industry.
Kyle loves you.
That's fine. Hi, Kyle. Reach
So
out, Kyle. I don't know who you are, Kyle.
Kyle
Reach out.
Southard, yeah.
Yeah, let's chat.
So guess what? So I need words for this. So what we're doing, it's almost like okay, if you put the worst interpretation on what's happening here, you're playing three card money. All three people are playing three card money with dangerous money. You've got property managers jamming residents into security deposit alternative fee programs that are just like payday loan centers. You got you got landlords taking rent advances that are kind of feels like payday loan centers. And then you've got, property managers facilitating this because they can line their pockets along the way without any regard to the long-term impacts of keeping residents in poverty cycles and landlords addicted to gambling. There's like some kind of like a weird loop going on here that's like not great for everybody, but there's a way of making money until the regulators shut this down. And how many years is it going to take?
Yeah. And look, I'm not saying this is bad.
That's being cynical. That was, I gotta put my disclaimer in there. That was me being cynical property manager, Mark, like worst case scenario. Now, I have already said in this conversation that I see a really positive like application of factoring done right because there are perishable opportunities and there are very intelligent, sophisticated investors that understand how to move capital around at the right time to maximize opportunities, who are not irresponsible and know they have additional cash sources in the future at lower cost to continue paying those mortgages and make those investments and not bring undue pressure to the resident or the property manager. But is that the exception?
My bet is that's the exception. And by the way, that is why at Fixed, okay, we will only do up to a third of rent, right, to pay back us, right? And that's not really us. We're just servicing with you to pay back someone else, okay? We double check mortgages, right? We make sure there's not like relationships between the manager and the landlord, because that happens all the time.
You're going back to the underwriting. Keep going.
Yeah, like we care a ton. Like we spend almost all of our time underwriting not only the PM, and honestly, I would argue the PM underwriting is the most important here. And so when you go and look at the backgrounds of the founders of these companies who are doing these things, if they've never actually run a management company successfully, right, profitably, right, like I'm going to tell you right now, like you're getting in bed with the wrong people, or maybe the right people if that's what you want to do, right? But like the point here is like if this does not work, there will be no other money coming back long term, right? We're trying to make this work for the very, very sliver, which actually is very common, of when what you said earlier does make sense, where the landlord, their opportunity cost of their money, because let's say they sell their shares in a short-term cap gains or whatever short-term, so they have to pay 30% income tax, right? Why would they do that and plop it into an illiquid investment like the improvement of their rental property, right? our money, for example, never goes to the landlord. It's deployed to the property manager. The manager spends it on our behalf, technically, or on the landlord's behalf. We do it for repairs, we do it for turnovers, we do it for improvements to increase the cash flow. You know the perfect scenario where this all actually does make sense? Because this is what we are doing, right? We analyze all the PM's portfolios that
It's
we
a light
partner with.
remodel that increases cash flow.
Exactly. It's the light remodel that increases cash flow that happens to also pay for our financing costs.
Right. Yeah.
Right now, the
That's a win all the way
landlord,
around.
yeah, it's a win-win-win, not this three-car Monty thing that's like ultra risky. And people are just like, you know what, well, we've got some sucker investor who's, rich and is like, I'll throw 50 million at this. They ain't ever coming back.
Okay, this is an interesting conversation. I can see how in the future regulators will come. It'll take a few years, and they'll say
Oh,
like,
yeah, of
"Hey,
course. Yeah,
hey, well, there's like a," and it might not ever get noisy enough for them to come, honestly, because like they've got lower hanging fruit, right, with late fees and security deposit alternative fee programs.
sure.
But I could see where some nosy regulators, like maybe not even nosy, but like well informed, is just like, dude, this puts your tenant in a compromising situation 8 months from now, because these people really shouldn't be advancing this money. They don't have the means of paying it back. They stop paying their mortgage. They stop investing. It brings more pressure. Residents' rights are being violated because proper maintenance isn't done. Property managers already sort of greased their palms, so not willing to hold the owner accountable because they're all in cahoots here and playing these games with financial instruments that make everybody better off but the resident who's stuck there with a worse living experience. So I'm always trying to think like, how's this going to go wrong?
Yeah.
Right. And I think that's where it could hit us. All right, we got to wrap this up. This has been fascinating. Go ahead.
I sent you a link to that snippet on The Big Short. Okay. It was the scene. Did you like,
yeah,
I would like
I love
you
that
to
movie.
Please append that to this, whatever it is.
This is live. I can't do that.
I know. I'm just saying, like, append it somehow in the future and just be like, Taylor said, watch this, because right now this is not happening in our industry. And if we start willy-nilly, like PMs just start originating these things and getting 2% of my management fees all get paid up front, I have no financial culpability to any of this. I can't be held accountable. I mean, that's what we're going to turn the industry into.
Yeah, I don't want property managers to become the salespeople for payday loan products. I don't want that to happen.
Yeah,
right.
That's not a good look for already, a look in the industry of like.
So there's a right way to approach this. There's a wrong way to approach it. I appreciate your conservative nature. There's a lot more to understand and see how this unfolds, and the risk proves up and everything, and so. Anyway, but let's get back to the original point. You think I have more credibility with more hair on my face. That's what you said at the beginning of this.
Yes, I do.
We had one watcher until I said that, and then they exited. All right, man. Hey, good talking to you as always, Taylor.
Likewise. Thanks, Mark.